Good day, and welcome to another round of Weekly Wraps. I am Viv Govender. This week we're going to cover the US shutdown, the gold price reaching $4,300 an ounce, and then take a little look at earnings season from the US, what's happening this week, as globally as well, a couple European companies there as well. And then in the AI/tech segment, we're going to have an examination of AI's energy demands and what its solution might be going forward. So let's begin with the US shutdown. Continues again. The longest shutdown we've had has been more than a month, which was a few years ago. This one has already gone over a couple of weeks. As I said when it first started off, the only way we can have a solution to this is when one party, either Republicans or Democrats, feels that the shutdown is hurting them much more than the other party. There has to be a clear loser here for it to basically result in a resolution. The reason is quite simple. The way these things work is that there's a party in power, the party out of power. The party out of power is trying to, get some kind of concession from the party in power, and that is why it's shutting down the government. The party in power basically will only break or give in to these concessions if it sees that voters are blaming it for the shutdown. The party out of power, again, will also only break and concede and let government start running again if it believes that the voters are blaming it more for what's been happening. Right now, the Republicans are slightly behind in terms of this race. They are being blamed a bit more than the Democrats, but the amount of blame differential is not very great. And Trump as well is more than willing to take a bit of pain, is more than willing to take some unpopular positions, especially right now where he thinks he's in a bit of a high because what's been happening, for instance, with Israel and Gaza. I think that that political win he's had there would translate into him being a bit more intransigent. The Democrats, on the other hand, haven't really pulled a really strong move against the Republicans in a while. Like I said, they are slightly ahead. The public is blaming the Republicans a bit more than Democrats, so they are not losing, and so they might not be willing to actually go and concede just yet. So as long as, like I said, this imbalance remains maintained, we might see the shutdown continue. Up to this far, there has been no market impact really. We've seen, what's been happening with regards to basically the market reaction. It's not really taking into account any kind of negative effects of the shutdown. The only negative effects we've seen in the last couple of weeks based on the government is being Trump's tweets about China, which we'll discuss a bit when it comes to the gold section, but that really hasn't been a big driver, the shutdown itself. Now, moving on to the gold price. Gold price has reached $4,300 an ounce. Now, if you had to break down why gold is as strong as it is, I've told you in the past, it's a couple of things. Firstly, it's people moving away from the dollar as a reserve currency, fears about the strength of the Federal Reserve, and also I would add in the rise of places like China and India as well, in terms of the global growth, economic growth. India is said to have the highest growth rate of any large economy this year, and gold demand in India is very high. On the private sector, so if people of India are getting wealthier, they're going to buy a lot more gold. Just to give you an example of how much more demand there is in India than most other places, private gold holdings in India exceed the US government's gold holdings by a factor of 4. So it's 4 times more gold is held in Indian private hands than is held by the US government, which is the largest government holder of gold in the world. Also affecting this particular situation has been some of the tariff discussions around the world, especially the discussion between the US and the Chinese. The Chinese have come out recently and, for instance, cut back on exports of rare earth materials, rare earth minerals. We see the word rare earth minerals, but not really rare, in real terms. But it's pretty dirty, pretty ugly process to mine and refine these things. And therefore, very few places in the world are willing to do it, and China is one of the places that was, and kind of developed almost a monopoly when it comes to rare earth materials. But the US government has responded by talking about 100% tariff on the Chinese. Trump has kind of facilitated that. He's basically, at the start of the week, he says, no, not really. Xi Jinping is a good guy. He's going to make a deal with me. At the end of the week, they're talking about possibly a trade war. This is a very fluid situation, but it does build into more uncertainty in the world, and therefore I think to some extent does support the gold price. I think a story that people may be missing is what's been happening with the other precious metals, silver and platinum. Silver has breached $50 an ounce and gone beyond that. In fact, if you look at the last month or so, the rise in silver has been even more dramatic than the rise in gold. Platinum has also come up quite strongly, over the last little while on the rise in gold. So I think that what's been happening right now is that people are looking at the gold price. Like I said, I think today, on Friday, as I speak to you, it went up to as high as $4,380 an ounce. This is $1,000 more than it was back in August. This is quite a big move. We are starting to see, physical markets reacting to this. And so I do think this is a situation that might even go a little higher if there's a bit of a squeeze coming through the markets. But obviously, when you have such a quick rise, you might have a pullback as well coming through. But understand that in the longer term, I do think that the fundamental drivers of gold, like I talked about, the move away from the dollar, the rising, fears around the Federal Reserve at least, and rise of places like India and China. Those things are longer term factors that I think are still going to play into a positive gold price over the longer term. Now moving on to earnings season. So we had some results coming out. There are three big aspects to look at. Firstly, banking results looking really strong. Investment banks have been making a killing, especially around things like corporate actions and so on, mergers and acquisitions, etc. These are things that I think have kind of been building up over the last couple of years. During the Biden administration, there was a woman called Lina Khan who was in charge of these mergers and acquisitions. She had a very, very anti-merger stance, going as far as to say that even if a merger had been approved, they could retroactively go back and look at the results of the merger and perhaps basically cause a breakup again if it wasn't seen to be positive for the market. And she was taking a much broader approach to mergers and acquisitions than the US normally does. The US normally looks at the impact on the consumer. She was looking at future competition, whatever that might mean. She was removed, and now we have a much more lenient merger and acquisition space out there. That could be one of the reasons we're seeing all these kind of deals between places like Nvidia and OpenAI, etc. Because it's a more open market to these acquisitions. We could almost select the stuff that's happened with Activision and so on more recently. Again, built on the idea that the marketplace for acquisitions, big corporate actions like this is more open. That's obviously going to be feeding through to the banks, because the banks are the guys that facilitate these deals. And when there's a multi-tens of billions dollar deal done, for instance, with Activision, the bank takes a bit of that money as well. When there's a big deal in terms of acquisitions or moves done for OpenAI and so on, the banks takes part of that deal as well. And they've been doing really well over the last little while, and that's feeding through to their profitability. The other one we saw come out this week that's important is ASML. That's the Dutch maker of the machines that are used to make the chips. So the way the chip ecosystem works, like Nvidia designs a chip, it sends the designs off to a company called TSMC, which is in Taiwan, and they're the factory that makes the chips. And TSMC buys the machines used to make those chips from a company called ASML. If you had to go out and say which is the one company in the world that does something that nobody else can do, ASML would be that company that has the strongest claim to that point. The machines that they make cannot be replicated by anybody else in the world. And I mean, even the Chinese government has tried really hard to get their own local manufacturing industry up and running, and the real bottleneck for them has been the machines that they can't access from ASML because of US sanctions. The Chinese have people that can design chips. AMD, in fact, can design chips that are equivalent to Nvidia. Nvidia's advantage is not just on the ability to design the best chips in the world. It's the whole ecosystem they built up with something called CUDA and so on that allows you to produce things that are good, but also that users are used to using and are comfortable using, and the kind of feedback that they are able to give to big users out there, and the kind of the service they give, etc. But then the actual technical aspect of building the chip, there's other companies that can actually design these chips as well as Nvidia can. TSMC has a bigger advantage, but we've seen that the Chinese have companies that can do this high-end manufacturing, maybe not quite as well as TSMC, but in a relatively close proximity. What they really can't compare with is the ASML's machines. And we saw from ASML's results that demand for those machines is reasonably strong and continuing to grow, showing that the underlying demand for AI is still very strong out there. It's part of our AI portfolio, by the way. It's been a laggard for a long time, but it's recently started to catch up with some of the other performers out there. And then we had LVMH come up with results. LVMH results were not great, but if you look at the share price over the last little while, it has already been down quite significantly. So these results are not great, but the market was expecting worse because you can see the share price has been falling. And so the results come out not as bad as people had feared. The share price rallies quite strongly, up double digits on the day the results came out, and in fact helped boost up a lot of the luxury goods makers like Richemont, etc. Going forward, we need to see some results coming out through from some of the other AI companies out there. See what demand really looks like on the floor. It's really important to see demand continuing for these companies to justify some of the price increases we've seen over the last year or so. To give you an idea how important AI has been, around about 40% of US GDP growth for the year so far has been attributable to AI, and about 90% of stock market growth in the US particularly can be attributed to AI and AI-related companies. That's a huge share. If we don't see that being basically supported by what's happening with the underlying earnings and so on out there, I think it would be quite a negative for the stock market, and quite a negative even for the global economy. As much as 10 to 20 billion, $1 trillion, of wealth is kind of associated with AI at the moment. You have a pullback in AI that's significant. Some of that wealth disappears. Trillions of dollars taken out of people's perceived wealth. It's going to have an impact on the global economy. Now, moving on to AI energy demand. So I wanted to talk this week about energy demand for AI, especially in the US. The Chinese don't have as much of a problem because the Chinese can build things that the US just can't build. A recent example was that the Chinese built one of the longest bridges in the world, I think if not the longest bridge of a certain kind in the world, for the cost of what the US spent on basically putting anti-suicide nets on the Golden Gate Bridge. That is a huge discrepancy in terms of the ability to produce something. The same amount of money in China gets you the longest bridge in the world. That money in the US can't even build a bridge. It just can basically get you suicide nets on an already existing bridge. That's a massive advantage that the Chinese have. The Chinese are adding on basically as much capacity as the entire US grid every few years. So the Chinese are able to really do much more in terms of energy than the US does. And energy demand for AI is pretty heavy. If you look at the latest measurements of what much energy is going to be demanded by AI going forward, it's going to look close towards 8 to 10% of the US grid within about 5 years or so. Now, that's all new demand. That's not there before. And if you look at energy demand in particular states in the US, we see particular states like Virginia and so on, or not Virginia, that is sitting at a third of the demand of energy in the state goes towards data centers. Many other states, smaller states especially, are sending a lot of their energy towards data centers. Now, the problem the US has is it can't really build energy the normal, you can't really build coal plants. It takes years to that. You can't really build nuclear power plants. That takes probably decades to get that up and running. It can't really, even gas turbines, with energy, energy environmental concerns. For instance, look at what happened with Elon Musk with Colossus. He just basically went out and started building it, and just got these portable gas turbines to kind of, power it up. It's already it's a negative pushback. And if you look at the bigger producers out there, of all the bigger companies out there in the AI space, things like, for instance, Facebook and Microsoft and so on, these companies have large corporate responsibility kind of commitments. So they can't really go out and just go and do the cheap and dirty gas turbines that Musk is doing. So what's left over from that? It's renewables. You can get solar panels up and running at a fraction of the time that it takes to get up and running a coal power plant or a nuclear power plant. The problem with renewables like solar especially is the fact that the sun only shines in the day. These things have to run day and night. You can't have it running half the day only. And solar sometimes fluctuates with cloudy weather and so on. Now, in the day, you could basically overbuild the solar. You can have more panels than you need, and so you could overcome the fluctuations in solar availability. But at night, you just can't get by with, for instance, moon power. You need sunlight. So in that environment, what you really need to do is you need batteries. And I think batteries are an important aspect of AI, energy demand going forward. there's been some interesting developments in battery technology over the last little while, especially with what's called sodium batteries. Now, the batteries you normally use, lithium batteries. Now, there's a thing called sodium batteries, very useful for energy, storage and so on. Not as constrained by some of the materials that lithium is. And it's also having a huge uptick in terms of development because it's a newer technology. So there's a lot more room, for instance, to grow in things like energy density and whatever. One of the great things about solar batteries built on the sodium, kind of format is, firstly, it's less sensitive to temperature in terms of charging than lithium is. Next, it's also able to do many more recharges than lithium is without degradation. And so some of the examples we put out there is that a sodium battery, for instance, on an electric vehicle could give you as much as 5 million kilometers of driving on that vehicle, 10,000 charges, on the vehicle. That is, if you look at it realistically, that's more than you do in multiple decades of driving. So this is a very interesting new technology coming about, and I do think that if you're looking at the demand for AI energy in the US, this is going to be a possible solution that they have to look at, because the other solutions, coal, gas, especially nuclear, are just not going to be feasible in the future, especially in the kind of short time periods we're talking about. Okay, that's it for this week. Thanks for having me. I look forward to being here next week. Cheers.